Is it on?
All right, here we go. We're on. We're live. We weren't sure if we'd started or not yet. Okay, so today we're going to talk a little bit about a tactic, a strategy that allows homeowners to utilize their home in a whole new way. If you're an investor, you own a home and you're thinking about getting the most out of your home, maybe you hadn't thought about this yet, which is...
Yeah, seller financing.
Seller financing. So that's it. He's just here to say seller financing today. He's just all right. So we're going to talk about the awesomeness of seller financing because in today's market, there's a lot less demand. There's a lot more supply, and so especially for when I'm talking to expireds and withdrawals, homes that were on the market for sale and have failed to sell, and we reach out because we specialize in helping people in with that little niche, is they wanted a certain price point.
Yeah.
Right. And with seller financing, what's been so awesome to learn, especially from you, some of the things that have really enlightened my skill set on providing value to sellers is seller financing. Okay, so let's touch first on, I think, the value of seller financing for maximizing price point.
Yeah.
All right, how's that happen?
Yeah, so like everything's not doing well in the market, so traditional, a lot of people like myself, I buy a property and I wanted to make a certain amount of return, preferably in the double digits. And right now with taxes being raised, it's really compressed my returns. And then also with
so taxes go up, and so
taxes
that adds to some of the overhead.
Yeah, at a property, cash flow significantly by 700% gone.
Yeah. So not only with so taxes are affecting that. Okay, so we're talking about seller financing on being able to get the most amount of money when we sell the property. That was one. That was one of the first points, right?
Yeah. So what I can do, especially if you don't have a mortgage on your property, is you can actually position yourself to be the bank. And so now taxes are irrelevant, and you can sell your house typically for a tad bit more than what the market would deem you now, because you're being able to give them the opportunity to bank with you, basically.
Right.
And so
because they can't qualify traditionally.
Right. It could be self-employed, or it could be credit reasons, but to have a lump sum for a down payment, preferably closer to 20% better, but we've seen them as low as 10%, even lower sometimes. It just depends on the seller, really.
So let's before we get ahead of ourselves, is the price point. So we're seeing our ability to sell properties 10 to 15% above market value. So listen up, expired withdrawals. If you want to sell your property at a price point that wasn't getting you an offer before, seller financing could be an opportunity for you, because people are willing to pay more for the property as a premium because they're unable to take the conventional and the traditional methods of financing. And they know that the seller is going to carry that note for 3, 5, 7 years, whatever it is. And so there's a premium to that, right? There's a cost to that. And so people understand, people who do seller financing understand that the buyers are willing to pay more. Now, I just want to touch on this just for a second too, because seller financing it just isn't for people with bad credit. There's entrepreneurs with 20% down who's maybe it is their credit, maybe it's their debt to income ratio, but whatever's happening in their life, seller financing makes sense, because traditionally they don't qualify, because even though they got $250,000 cash and their credit is good, their debt to income might be messed up, or their credit's bad and then their debt to income's okay. And so there's viable quality candidates to buy, just not these these people who may be considered the less desirables.
There's actually a lot of people out there too who aren't buying on principle. They just don't want to spend 7-8% on a traditional mortgage. And I don't blame them. I mean, the cost to buy that down's really high. Of course, you're trying to get the seller to pay for it, but you skip all that with seller financing. We have some sellers that are doing below traditional market, because that's a great return. Think about it.
As far as the interest rate.
Right. You're getting 90% of interest on your payment.
Most of that's happening, though, because of the people that are free and clear.
Right, yes.
Right? Because there's a whole other form of seller financing that maybe we'll touch on in another video, of wrapping and seller financing with a wrap, where you don't have to be free and clear, but you can still do it. But that's a whole nother, I think, nut to tackle maybe on another video. So seller financing, where you're free and clear though, you can take and you can finance at an interest rate below the market rate and still be making a ton of money. Okay, so 2 points more, because we talked earlier today on these caption ideas of seller financing, and one of them being free equity. Okay, what's free equity?
Free equity. So you're getting the down payment of the buyer. So right now, an investor myself, I want to go to the bank and get equity out. Well, I can't unless I want to refinance my entire loan, or I do a line of credit. But even then, I'm paying a 7 or 8% return on that, which I don't want to do.
Money costs you money.
It just it's stuck in the house. So down payment from the buyer, 10, 20%, gives me that money, and then I'm making interest payments now from the buyer. So it's kind of I'm getting it at no cost.
Right. So they're giving you that down payment, 10%, 15%. We're getting 20% down on the down payment from the buyers, and that's equity that you freed up, and it didn't cost you $5,000 or $7,000 through a refinance. The interest rate stays the same, and you're basically being the bank with possibly even more cash flow. Okay, so let's talk about increased cash flow and the ability to either to get more cash flow from the property as a rental when you're seller financing. Okay, how do you increase your cash flow with seller financing?
So a couple things. So now you're eliminating taxes. So we've all had a huge tax increase this last year or two with all the prices increasing. And then you have now more inventory. So that's speaking to now there's more to choose from. So you have tenants actually being more picky on where they want to live. So your vacancy rate's going to go up a little bit more. So you could go 1, 2, maybe 3 months vacant. You got to account that for your cash flow and your returns. And then you also have your normal wear and tear and your maintenance, right? And your utility carrying cost with vacancies, which is your vacancy cost.
So all that's in alignment with it being more difficult to rent. That's what you're saying. Right. So with increased cash flow, how does that benefit me? With
So now how
does that happen?
So now you're not paying taxes because now the buyer's paying taxes. You're not having to pay your insurance because the new buyer's paying the insurance. And if you're wrapping it, that's a little bit of a different story. And then for repairs, you're no longer the owner. You go from owner to bank. And we all know banks make more money than anything. And so the new homeowner, the buyer, is now responsible for all of the repairs.
Gotcha. Yeah, and all that adds to more cash in your pocket.
More cash.
Yeah, I love it. Seller financing. Let's do another video on seller financing with people who own a note, right? They still have a mortgage, because I think that's valuable too. So here we know that almost 45% of homeowners in the United States. I guess you still have to see the data on that. Well, that's what Lyle says. He says he saw the data, and he's a data guy, so I'm gonna take his word for it. That 45% of the homes in the United States are free and clear. So if you're an investor and you're trying to figure out how to get better cash flow, how to free up some of that equity for another investment, or to pay off your daughter's college tuition, or whatever, right? The seller financing can provide some safe alternatives and advantages for the people who are working with the people who know how to get that done, right? So hey, if you're an agent, you got more questions for seller financing and how it works, and even if you're in the Austin area, we'd love to mastermind with you a little bit, or find out if there's a way that we can help you with that. And if you're an investor, DM us, subscribe, send us an email, and pick up the phone and call us to find out how we can provide more consultation on if seller financing may even be right for you or not. Good?
Absolutely.
Yeah, man. Appreciate your time.
Absolutely.
Awesome. All right, guys.